So don't overthink that. Again, very mid-curve when people start talking about what is the value. Okay, stablecoins. What are stablecoins? Remember the story of the eurodollar market? Well, the eurodollar market is great for companies who need to borrow and lend in dollars because most 87% of world trade is in dollars. What about people?
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. The ongoing decline in the crypto market persists, as the majority of top cryptocurrencies have experienced a decrease of at least 6%. Over the past 24 hours, as of the time of publication, the CMC Crypto Fear and Greed Index has been utilized as a metric to measure. The market sentiment is currently leaning towards greed, reaching its lowest point since early February. This suggests that investors are cautious about potential pullbacks, particularly with the upcoming 2024 Bitcoin Hing event just around the corner. Negative press has begun to circulate, but Raoul Pal, the founder and CEO of Real Vision, a highly regarded figure in the industry, believes that this is all part of the normal dynamics of a crypto bull market. On social media platform X, he recently shared his thoughts on the matter. The market has a tendency to unsettle and discourage investors, often resulting in significant pullbacks of up to 35% before a rebound occurs. Pal's positive outlook on the bull market goes beyond the usual dynamics seen in crypto bull markets. According to the respected macro analyst, this current market may not follow the typical pattern, and instead it is just experiencing a temporary pause before prices soar once more. During a recent interview, Pal shared an interesting conversation he had with a prominent billionaire and former hedge fund manager. According to the billionaire, there is growing concern among the billionaire crowd about the potential for crypto bros to surpass their wealth. It seems that they are now considering joining the cryptocurrency industry as they can't beat them. Additionally, commercial real estate professionals are also seeking a way out of their sector's drought and are eyeing the cryptocurrency industry as well. Pal predicts that most of the upcoming demand will come through BlackRock's IBIT and other spot Bitcoin ETFs, which will bring together the trillions of dollars from the traditional finance world and the cryptocurrency space, marking the second wave of demand for these new products. This prediction highlights the potential influence that these new products could have on the cryptocurrency market. My friend is extremely optimistic about the upcoming surge in demand. He confidently predicts that Bitcoin will reach a minimum of $200,000 by the end of the cycle in 2025. This is his conservative estimate. According to his analysis, there is a possibility of things escalating rapidly if demand continues to put strain on the limited supply. In this scenario, Bitcoin could potentially reach a staggering $600,000 per coin before the cycle concludes. We have included excerpts from Pal's conversation with Bankless for you to review. Please consider taking a moment to support this video by liking it, subscribing to the channel, and enabling post notifications for similar content in the future. Please feel free to contribute to the discussion by leaving your comments and observations in the comment section below. Thank you and enjoy the video.
And everyone will debate this, but that's very mid-curve. What this is, okay, we're looking at rates of growth. So it says 516 million, I think the number now is 550 or something, million people. Okay, there is not 550 million people. It's 550 million active addresses. But what are we comparing it to? The internet. What are those numbers? IP addresses. How many IP addresses do you have? I have no fucking clue, but it's a lot. How many wallets do I have? I have no fucking clue, it's a lot, right? Compare them. That's all you're trying to do. So that's, anybody argues in the middle is just, again, mid-curving it. Oh, well, there's not that many users. So let's go back to the use case. Wealth is a use case. People are making money. That money gets recycled to the economy. That's good. So creating something that has value, all value is a mimetic. It's perceived value. It doesn't have to be utility value. Gold is a mimetic. Religion is a mimetic. So don't overthink that. Again, very mid-curve when people start talking about what is the value. Okay, stablecoins. What are stablecoins? Remember the story of the Eurodollar market? Well, the Eurodollar market is great for companies who need to borrow and lend in dollars, because most 87% of world trade is in dollars. What about people? You ever tried to go in the bank in the Philippines or India and try and get dollars? It is not easy. But now they've got a fractionalized Eurodollar market. Okay, I mean, this is dollar dominance writ large, right? Okay, so that's super interesting. But it gets more interesting than that because stablecoins are being used by corporations. So there's capital controls in Indonesia and Malaysia and in China. But those two nations trade with each other a lot. So as opposed to filling out all the paperwork for capital controls, having to do all of this, they're using stablecoins for instant payment. Brazil is doing a lot of this as well. So we're seeing a lot of uses of this globalized dollar market, which is the stablecoin market. It's on crypto rails. It's like private sector CBDCs, but for dollars. Okay, fine. That's great. And that's big. Then we've got, we're obviously seeing the beginning of DPIN. That's interesting. Some of these are getting quite big. Helium's getting pretty big. HiveMapper's getting pretty big. So very interesting. We've got to mark that down as, okay, there's some real use cases of bootstrapping networks by using tokenized incentive systems and building it on a Web3 stack. Great. We are seeing the financial system building on top. We know, because they've all said, and this is my thesis from 2013, the entire financial system will go on tokenized rails. Why is it not already? Because it doesn't work fast enough yet. It cannot simply support at the level of security the financial system. Just can't do it. Now we're getting one step closer with when Firedancer comes. Why Firedancer matters? Jump trading. They understand the game. Are we there yet with Ethereum? No, so it has to be a settlement layer. Okay, that's fine. Ethereum works well as a settlement layer. But will they use a regular layer 2 for this? What, for the entire futures industry? No. They're going to have to find something. Now, whether that's a NASDAQ layer 2, well, we've just seen that with Base. Okay, that's interesting. So, look, everything is coming into place for that. And we're seeing asset managers testing out this thesis by tokenizing stuff. But we haven't even started that game yet. But when Larry Fink, the world's largest asset manager, tells you he wants to tokenize every single thing, I tell you that every single firm on Wall Street understands this too.
During the interview, Powell also discusses 3 significant scenarios that he envisions could unfold. In the next 12 to 18 months, there is a possibility that Bitcoin and other cryptocurrencies will reach new all-time highs in 2024, similar to what has occurred in previous bull markets. Another scenario, which is less optimistic, considers the regular crypto fundamentals, such as the Hing event and the typical 4-year bull and bear cycles. The second scenario is more optimistic, as it considers the increase in wealthy investors and the significant amount of money flowing into the cryptocurrency industry through spot Bitcoin ETFs. In this situation, it's difficult to predict the extent of price movements. While Pal believes that the first scenario is more likely, he notes that the chances of the second scenario are growing due to the rising interest in spot Bitcoin ETFs. Let's return to the interview, where Powell explores all 3 scenarios and discusses how the macro environment might impact the crypto market in the coming months.
I knew all these people in 2020. I was talking to them all. They're all building. Goldman, JP Morgan, Morgan Stanley, BlackRock, Apollo. I mean, every single firm has a Web3 team, a blockchain team, all of them. So they know it's coming, but they've got the same speed bumps that we've all got to face, which is the bloody US regulators when they're ready. There's no point pushing for the tokenization of all assets when we don't even have a blockchain that can support it. I mean, that would be dumb. We would score an own goal, and so would they. Now, Australia tried to tokenize their exchange, gave up. A friend of mine worked for London Stock Exchange. They looked at it for a number of different things. Many of the futures exchanges have looked at it. We're just not there yet. We're just not there yet. So, there are some protocols that are getting closer. SWI, which I'm on the foundation of, just so disclose, that object-based move protocol is bloody fast as a layer 1 and very interesting. They've got a chance. So, But we're still not there yet. The compute's not big enough to manage it all. We've just seen Solana with its scaling problems. ETH went through this last time around. If you go back to the 2020, 2021, ETH had the same problem, massive congestion issues. Bitcoin's had it before. It's normal. This is what adoption looks like, but we're just not ready for it yet. So it is coming. Gaming, that's another one. And people don't really understand why we want games. Feels like a forced narrative, but the forced narrative will reveal itself over time once you realize that the assets that you own in one world may be transferable to another world, or just transferable into money.
There have been numerous conflicting signals from central banks, particularly the US Federal Reserve. Regarding rate cuts, many market participants believe that interest rates will not go back to pandemic levels, but there is a belief that central banks may have to cut rates significantly due to the massive debt load. The former Goldman Sachs executive suggests that the Fed may struggle to make interest payments on the $34 trillion debt with high interest rates. This is why the gold market has been performing well. Despite this, there is still a strong, bullish sentiment towards the cryptocurrency market in 2024 and beyond. What are your thoughts on Raoul Pal's interview and predictions for Bitcoin and the entire crypto industry in 2024? Feel free to share your comments and observations below. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.